This is a continuation of what I did a few weeks ago, and I'm going to try to hold a couple of webinars a month. I actually enjoy doing them, and I don't consider them work, so I hope you don't mind sitting in on them or listening to the recording. This is the raw relative strength SmartGroup, as you know, if you watched the last video. And the reason I wanted to use it is because it gives us a predefined list of stocks that have a high RS rank. Hang on one second. Now I'm recording. Anyway, this is something that I think you may find interesting, and Paul reminded me of it last time. We have the ability in HGSI to see stocks that come in to the group on a daily basis. Now, this list of stocks is generated with a combo rank, and it finds stocks that have high RS and or group rank, and it does a good job of that. Now, just because a stock has a high relative strength doesn't mean it's still going up. It can be going down, but it's still outperforming. If you have an RS, if it has an RS of 95, it's still outperforming 95% of the other stocks in the database. But it's a longer term indicator. As I explained last time, when you, let me just bring a chart up here. 40% of the relative strength rank is based upon the last 3 months, and then the other 60% is based upon the prior 3 quarters at 20% apiece. So it's a long-term rank. Now, this is a stock that is holding up well. In fact, it's in yesterday's list. And I believe it's still in today's list too. Now, what I've been doing is I've been dragging the prior day down, or leaving it there, and then dragging the fresh group down to the designer. I'm sure you know how to do this, but I'll show you anyway. I just go under EN and I, and the combo sticks out right here. All you have to do is drag it down to the user group. So I'll just drag it down again, and then I'll delete it. And the reason you may want to do this, so you can see it's the same as the one before it, so I'll just go ahead and get this out of here. The reason you may want to do it is because you can use the prior day's data and look into this smart group and see which ones are new to the group. And I'll show you how to do that right now. Okay, so I'm going to go into yesterday's, or not yesterday, well, yes, yesterday's, the 18th, and I'm going to edit it. And then I'm going to go into the right window. I'm running automatic updating in the background, so maybe a little slower. So I just click in this window, select all. This is selecting every stock from yesterday. Then all you have to do is go down to your groups, go to the user group, select the data from the current day, click on add, and look at the total number down at the bottom here. It's 100. When I click on add from this group, it's 109. So that tells me that in the top 100, which is an arbitrary group based upon the top 100, the ones that best fit this combo, these are the stocks that are added today. Actually, the index is in there. Let me cancel that and do that again. I made a mistake. Okay, so I edit this group, which is the prior day's group. I click over here, I select all, then I go down to the bottom, I select groups, I select user groups, I select the new group, I click on add, These are down here, and then these are selected. The dark background is selected. So I click on remove, they're gone. I click on the index, remove. So I have 8 new stocks that are added to the relative strength group today. I don't know which ones have been eliminated. I really don't care. I just want to know what the new ones are. So if I click on OK, you can see that they are now in this folder. And if I click through to the warehouse, I can see which of them are making some progress today and which ones aren't. So here are the 8, and you can see that 5 of them are up and 3 of them are down. Let's look at the intraday range. Looks like most of them are off of their highs already. This one is at 62.92% or 63% of its daily range. So they had some momentum in the morning, but it looks like some of them are pulling back already. So let's look at the chart. I'm just going to use this one because it's on top, and then I'm going to go into the current group. These are just the new ones. Okay, now this is a stock that I am not familiar with. And if you look at your charts, I have made some modifications, slight modifications to charts 1 and 2 up here. And what I've done is I have modified this window and this window. I call it expansion contraction. When stocks are expanding, of course, and they can expand in either direction. They can expand up or down. And when the red bar goes below the 0 line, they're obviously expanding to the downside, as you can see right here. And that means the 3 has crossed below the 6-day exponential moving average. When they expand to the upside, that means that the 3 has gone up through the 6-day moving average. Now in this window, it's expansion, contraction, 6 versus the 18. This is the micro trend or very short-term trend, and this is the short-term trend. There's a difference, and the reason I put both of these in here is that this is and this isn't the best stock to show this. Let me see if I can find something a little tighter here. Well, this will work. What this does is it helps keep you on the right side of a stock. If you have the 3 and the 6, that's a pretty rapid crossover on the 3 and 6-day exponential moving averages, because they are exponential moving averages, and they cross over pretty quickly. So back here, let's just take a look at this back here. This, and a reason I like this chart is it shows expansion and contraction. It also has the VPA flags in here. It has all of the moving averages that I use. Where'd my chart go here? And it has pocket pivots and volume point of control. So, there's a lot to digest here, but these are all visual aids which can help you get into a stock, or it will help keep you in a stock. Now, let's look at the next chart. I'm on number 1 right here, but if I go down to the next one, and I use thicker lines here, this is the same chart, but I'm using the 3 versus the 6 versus the 18, but I am only using those moving averages those three moving averages on this chart, and I'm using the group line in this chart. I took the group line out of chart number 1 because I thought it was getting real congested with all these moving averages. So if you want to see these crossovers a little better, just drop down to chart number 2 and you'll also have a group line down here. Now getting back to this area here, you may miss some VPA flags and so on, but you may catch the 3 crossing up through the 6. And what I did is I put a screen in here today for you, or for us, to help us catch the 3 crossing up through the 6. And you can see that it did it right here. Let me make this larger and go back, see if I can find this area. I'm not sure if I'm the same spot. I think I am. Okay, so there's 3 VPA flags here. And, that's a decent signal in itself. And then when we get over here, what do we have? We have a pocket pivot. We have expansion beginning. We have an effort to rise. We have the group rising. And the VPOC is already positive. So there's a lot going on here. The 18 crossing through the 6, it is just barely happening. You can't really see it on here, but it's happening too. Now if we go back to chart number 1, what I did here is I put the percent close to these exponential moving averages in this little box over here. So if you, but this is today's data. I can't look at this and go back and get the percentages there, but let's take a look at this here. I don't want that. If I bring up the data window, if you bring up the data window on some of those where you're unsure, you really can't see it, and if you move your crosshairs around, you can see that these numbers here do change. So you can figure out if it's that critical that the 6 or which ones that have crossed over, where they are relative to their moving averages. Okay, so this is the last day only. If you bring up the data window, you have the ability to go back and see the relationship of the price relative to the moving averages, which is very helpful. Okay, let's go back to number 2. So that is the basic explanation of what I'm doing with this, and we're going to do some other things here. I'm going to generate the list like I did last week, and we're going to take a look at some stocks and see where there were good entries and possibly exits, or where there were exits based upon these crossovers and the other indicators. And the reason I want to do this is because these relative strength stocks, they come and go out of that list every day. So if you like, I don't know what you mean, Gurjeet. What do you mean? Why change 318 to 618? I'm not using, I don't know what you mean. Are you talking about the moving averages? Okay, are you talking about the 3 versus the 6 and the 6 versus the 18? If so, they are 2 different crossovers. This is considered the short-term trend. This is considered the micro trend. This will get you in earlier as a rule than this one will, and this window right here can give you some staying power. Let's look at it right here. Depends on as Paul says, how your Tums are, how if they can settle your stomach or not. But as this price comes back down here, you can see in this example that the 3 crossed the 6, and you should probably be getting out. But oftentimes this is going to happen. You're going to find support. And if you're looking at the short-term trend compared to the micro trend, it can help you stay in. Now, you get over here and you see both of them are going under. They're contracting. By contraction, I didn't explain this. Expansion, contraction. Contraction means when they really come together, and it's really not above either line, and a stock is in a congestion area. So if you see really flat areas like right now on this stock, you can tell that this is a congestion area. Nothing's happening. It isn't really expanding or contracting. But that's why I do it. It just it depends on your stomach. You know, if you want to write it out a little bit, give it a little more breathing room. If both of these go negative, you can be in trouble, and you can be in big trouble too, because you know, these things can happen fast. But I primarily devised this to help get us in to stocks, and then these, once you're in, to help keep you in a stock, either long or short. I hope that answers your question. Okay, thank you. I didn't know what you mean because your numbers were wrong. Oh, I see what you did. 3, I thought it was a date. Okay, anyway, as long as it's clarified. Now let's go into this group here. Let's go into today's group and see what's going on here. Just one second. What I want to do, last time, I hope you all watched the video from last time, but if you didn't, I created a list or a filter of the current group, and then I ran it against the list. I'll just go ahead and do it again because I think it bears repeating. So what I do is I save the list as, and I just put it in my EdgeRater folder. You can put it anywhere. And then I open up my filters, and I placed this filter up here under my name under the group inclusion filters, and here it is right here. Symbol list, raw relative strength, raw group rank combo. I edit it, I clear the filter, and that list that I just created, I load that list, and it's right here. It always defaults to the directory where you were before. So I'm going to load that. So it didn't find the index. That's good. I don't know why I generated an index in the first place, but anyway, so I have that list, and then I have to go into the designer. Now, I don't expect you to do this, but you can do it. And you click on this arrow here. It must be updating. And it looks like, let me clear this. I did this a little earlier today, and I'm going to go into the top 100 RS combos in my non-index groups that I update every day. And I'm going to check the children also, and you can see that every one of these sub folders are checked, and I'm going to run that. I'm not going to make a group from it. I'm just going to make the HTML. And this stock, whatever it is, started appearing on the 3rd of January. It's Arrowhead Pharma, and you can see how many times it's been in this group. 138 times since the beginning of the year. So let's take a look at ARWR. I'll go through several stocks here. I'll just sort by symbol. And then I'll type it up here. And then I'll click over here on this folder. And it's going to show you everywhere where it's going to show you all of the ETFs that own this or have it in their ETF, Arrowhead Pharma. Index components, you can see where it resides. Industries, and then you can see how many times it appeared in the HGSI Top 50. You can also see that it appeared in stocks and groups to the upside multiple times. And look at all this. I mean, what's interesting, a lot of these stocks that appear in leaders' raw relative strength, and you'll see this as I go through this, don't appear in stocks and groups moving up. They just don't make the cutoff. But if you have both groups to look at, you're going to locate a lot of these stocks. So back on January 3rd is where it first appeared. So let's take a look at Arrowhead Pharma. And how far back am I going here? And I said January 3rd, I believe. Okay, so there's January 3rd right there. You can see, looking at this chart, that there was an effort to rise and also a negative VPA flag, which means that there was excessive volume, so there may be selling in there too. You just have to go with what is dominant here, and you can see the bullishness was dominant. Here's a pocket pivot, and you can see that the expansion, the 3 versus the 6, had already really gone positive on this. Now, this may not have been the first time this appeared. I'm not looking at 2017 data. I'm only looking at 2018 data. So I'm assuming that it appeared back here also. But let's say you started looking at this on January 3rd and you see this expansion with a pocket pivot, also with a VPOC, and the expansion 6 versus the 18 is very significant too, because these histogram bars are moving up sharply. Now, how would you manage a stock like this? It depends on your trigger, of course. So it had a big move up. Then you can see the 3 and the 6 are starting to come together, especially right here. Then you're getting on the 3 and the 6 into this consolidation area. You can see that it was riding on those 2 moving averages. I hope you can see this well, because I don't want to come back, expand it and move back to this. I think you can see it all right. And then it dips below the 6 and it starts losing momentum on the 18. So if you have a quick trigger, you should probably pull the plug when the 3 goes down through the 6. Keep the stock in a watch list. Look for a re-entry point, because if you drifted down here, then on a percentage basis it starts getting painful. Doesn't look so like on this chart, but it dropped quite a ways. And you can see that the 6 dropped below the 18. And then what happens here? We have a renewal after this next consolidation area right here where it just tracks sideways. And notice that it's really hugging the 3 and the 6 there. Let's see if I can do this without screwing things up. And then right in here, this is just the three moving averages without the others, but it's holding steady. Um, there's not a lot of volume. It's really hard to tell here. Let's see if I can look at this, but you can see the volume is dropping here as it is consolidating. So that means there's not a lot of selling pressure. And then what happens with this expansion? The 3 goes back up through the 6 on this day right here. So that could be a re-entry point. You can see that they're spreading apart. And then what happens? We get a run, and then the whole process repeats itself, and it starts drifting down. But this is the way stocks act, as you know. This is a very cheap, inexpensive stock. So it's going to be a lot of volatility, back and forth. So you're going to get moves like this. But rather than sitting in the stock, because you don't know what direction it's going to go, obviously, I wish we all did, but we don't. But you can see the momentum. It's losing momentum again, and then it went below the 0 line. Here's another re-entry. Really kind of a sideways move, maybe a little bit of whipsaw. Look at all the VPA flags here, though, that are indicating that that there is interest based upon these VPA flags, and these are support flags. This is a test. This is a confirmation of that test. This is strength seen returning. This is a confirmation of that. Here's another test, no supply. And then this starts going back up as expansion comes back in. It takes a lot of patience to sit through these consolidations, and a lot of times I just don't have the patience, and I'd rather get out and see what happens. A lot of times I miss stocks too that I wish I had stayed in. There are no easy answers, and I'm sure you've all experienced the same thing. So what do we have here? This is a huge consolidation area, really, but the range is, let's see, what was it that day? On the high, it was 675. On the low, what was it? 501. That's a pretty good percentage range there. So then when you get lucky enough, or if you use the new screen I'm going to provide for you to look for these stocks where the 3 is going up through the 6, and you have a lot of EPA flags, you start seeing expansion, especially on both of these, then you may be on to something. And then look how this stock runs, and it stays above, the 3 stays above the 6. Right here, it dips down one day only, and then it takes off again. Yeah, a little bit scary when you get that kind of candle, but it's a shakeout. How do you know it's a shakeout? Look at this long wick here. And then it held above the 18, and you can see that in this window right here, and it made another nice run all the way up to $18, it looks like, somewhere in there, $17 or $18. And then the momentum starts to slow as the moving averages come together, and it goes back into a consolidation mode, or a congestion mode, whatever you want to call it. But also, look at the group. The group had a lot to do with this shakeout here. Once again, below the lines turned red. This was a false move on this, obviously. And, it just depends on how active of a trader you want to be, too. I certainly wouldn't be sitting in it with both of these negative. I may sit through some of these, but not very often, especially if the group's weak and if the VPA flags are mostly negative. Here, as we're starting to see some support here, These are still both negative, but you can tell that there's some buying coming in. Let me zoom in on this a little bit so I can explain this a little bit better. There's some buying coming in here. Here's a final shakeout and then earnings. I assume that's earnings. But I like this chart or these two charts because they give me a visual of expansion and contraction. And this one also includes the group. Now let's go look at the next stock, which has appeared most often. If I can find my HTML. MED. Okay, before I do that, I want to point something out to you. Where's my group? Here it is. I just want to point out that if you look at these raw relative strength stocks, or this combo, this group that is created for you every day, you're going to find all of them in the 90s. Unless we have a really bad, well, no, they'd all be in the 90s because 100 stocks are going to be outperforming the rest of the group. And you can see the group rank is high. There's only 2 yellows in here. But what you won't see in this is the EPS rank necessarily being high. Look at all these blanks. Well, it updated and screwed me up. I wanted to keep this data current though. Like here's Funko. Is that how you pronounce that, Paul? Has a 99 RS, 95 group rank, and no earnings. So this is why I created that combo many years ago. What's wrong with 3 and 6 and what I'm using? If you want certain fields, you have to make that request through George and Matt. I don't have anything to do with that. You know, you can get a million moving averages. Just find something that works and stick with it. But the point is, on the EPS ranks, yes, you're going to find some with good EPS ranks, and you're going to find several that don't have EPS ranks and have horrible EPS ranks. But when you're using this group, you just have to ignore those and go with the chart and what comes up in the group. Okay, now let me get back where I was going. Sorry about that. I wanted to do that, throw that in before I forgot it. Now let's just see what this stock has right here. Has an EPS rank of 12, a relative strength rank of 99, and a group rank of 97. So it's outperforming 99% of the other stocks in the database. If we use this group, and you can use any group, I am just using this group. You can use the stocks and groups moving to the upside and do the same thing. But the thing is, there's a much higher turnover in those groups. If you want to try to simplify and stick with one group, I think this group is good, if not excellent, because you're going to be able to find some winners out of it. It's just one of the few, many things we can do with HGSI, and I like the theme of the relative strength, which is used in many programs and many processes. Obviously, the can slimmers would not use this because the earnings are bad for a lot of these stocks, or they have no earnings. But just because they have no earnings, like this one, what is the percentage return on this stock from the beginning of the year? I could look it up in a warehouse column, but let's, and I know a lot of you don't like to trade biotechs. I'm not crazy about it, but I just want to show you that if you ignore these stocks because of EPS, and this looks like, here's the beginning of January right here. This is January 3rd. Approximately in 180 periods, it's up 424.7%. Now, because the earnings are negative, if you could be in and out of this stock multiple times, would you choose to be? Maybe, maybe not. But by limiting yourself, by requiring a really strong earnings report, you're just not going to see these stocks. That's all there is to it. Okay, let's get back to where I was if I didn't lose track. I wanted to look at med. So let's go in here. And I'll type in med. Now, this is a stock that appeared. See, this is what I mean. This stock did not even appear in stocks and groups moving to the upside. Not once this year, but it appeared in Best of Woodward and Brown. And Best of Woodward and Brown is 10 stocks that appear most often in all of the Woodward and Brown smart groups. And then it cuts off the top 10 and puts them in Woodward and Brown. So this stock started appearing there back on 313. When did it start appearing in raw relative strength? On 3/7. So just a few days before. Let's take a look at Medifast. Now I can zoom out on this one. Went a little too far. So 3/7, that's probably it with the buyable gap up. That's where it first appeared. Obviously, you don't know if it's going to be a buyable gap up or not until you have a few days behind it, but that's when it appeared. It never did challenge that gap, and it started moving up. What did the micro and the short-term trends do? They started showing expansion. Started showing expansion on the 3 versus the 6 back here. And then the 6th versus the 18th popped in here on the same day as the buyable gap up. And then it went into a consolidation period. A lot of negative VPA flags, but notice how this stock just hung in there. It on the micro trend, it stayed positive. It looks like it went neutral or completely flatlined right here. Went a little negative right here, but a very tight chart through all of this. And then it had a, let me put my crosshair back. Well, I had it on, sorry. Right here, you can see that the short-term trend never did turn negative. So that's why this window is in here. If you're unsure if it's really tight like this, even though it lost momentum, it didn't go negative. So that can help you stay into a stock, and this must have been, let's see, 318. Wouldn't have been, one of these is an earnings report. I don't know which one isn't. Probably this one here. Anyway, got another boost, another buyable gap up. Never did challenge it. Look at the expansion on both of these, and it stayed above the 3 and the 6. You can see it much easier here visually until right here, and it got whacked down. Looks like the group got whacked on the same day. And then what happened? It stabilized 3 VPA signals. Here's a test for supply. Here's a confirmation of that test. Here's another test. And then it started expanding. You notice on this big move down that it didn't break down on this portion of the histogram. Stayed positive. So it's, you can think of this as a filter for the 3 and the 6. And then it stayed positive as it worked its way higher. I don't see anything negative until recently, and it really sold off here recently. So where does this get you out? First of all, I would have a trailing stop on this if I were in that stock, which I was not. But it went flat here, and then you can see that there were several negative pocket pivots here. Look at that volume coming into it. When you see that kind of volume expansion and the red bars down here, the rose bars, that means there's a lot of dumping going on, and that's exactly what happened. So you can use this and this window, volume, and VPA signals. Here's your VPA signals. This one right here shows indecision. It's a transfer of ownership. It tried to go higher, closed mid-range on heavier volume. You can see the volume's heavier here. That's a warning sign. And then it started breaking down, and the micro trend really didn't break down until the crossover happened right in here. So it would have cost some pretty big dollars if on a heavy position, because it got up to what, 261, and by the time it crossed over here, it was down to around 235, 237, something like that. There's nothing perfect. We all know that. Look at this. The VPOC actually turned negative here too, but that was a little bit late. The earliest warning are your VPA flags. So we really need to try to use all of these in conjunction. Now look at this stock today. Is this today, Thursday? Yes, it is. Look at the reversal on this stock today. It opened here, traded all the way down here for some reason, and now it's trading at its high. Let me go to chart number 4. Intraday, it's at 97.22% of its daily range. It's up $1.26, but look at the volume, 500% of normal today. I don't know if there was news on this stock or not, but it's a high relative strength stock. As I said, 40% of the RS is in the last 3 months, and the other 9 months are split equally at 20%. So the RS does not change very quickly, as you can gather. I mean, you're not going to see an RS change here. I mean, it may have come down, but if it came down, it had to be 99, and it's only 98 now. So that's why we have to look at some other method of getting in or out of these stocks, and that's why I put these charts together. I know there's a lot of decision making, but at least you have some visual guides to guide you. Okay, let's look at the next stock. MRTX, another specialty pharma, 126 times, started appearing back on the 2nd of January. MRTX. Okay, there was a cautious report and it had that kind of response. Evidently, not everybody believes that report. Thanks, Piers. Okay, so let me just type it in. And I'll zoom out on this. So you can just go back and look at a history here, lengthen your chart and see how well these micro and short-term trends work to keep you on the right side of the market, and then combine them with VPA flags. Look at these other moving averages too, because Many times the 50 or the 100 will provide support like it did here. This is the 100. This is the 200. This is the 50. This is the 18, and so on. You'd be surprised how many times these stocks just rest on these moving averages or even reverse positions. So I said this one, I'm a little bit, I said this appeared on January 2nd in this group. It's an RS98. Look at the EPS rank. It stinks at 41. Group rank on this one is not good. It's a 64. And it has moved up from as of today, it's up 215% over 180 periods. But it would not have been a smooth ride. So that's why I believe you really, now not everybody's going to agree with me, you really need to trade these stocks for safety reasons. And if you can catch these stocks when they're expanding, and if they stay, especially stay above the 3 and the 6, you can catch a nice ride on these stocks and take the emotion out of the trade. Now here you can see that it fell off sharply. It went from expansion to contraction, and then it expanded to the downside. But this window, or the 6 versus the 18, was not even challenged. Where did it come to rest? On the 18. There's a hammer. It closed on the 18 and it moved right back up. Let's take a look at it on chart number 2. The group held up here, but this is a big group too, so I don't know what this shakeout was all about. But what happened here? Look at that volume coming in the following day. It had to be a shakeout, a rumor, something like that, and it just shot right back up, and it had a nice run from here to here, pulled back. This did not, in this window down here, did not break down until just recently. And now you can see that both of them, as of today, have popped above the 0 line. Look at all the VPA flags here. Are most of you using VPA, or if you're not, say no, because they're very good guidelines, these signals, especially when you combine them with these indicators. I think it was a major improvement when Matt decided to put these into the program. I originally was trying to get him to integrate the HGSI with Amy Broker to use the VPA system that's available for Amy Broker, but instead Matt he didn't tell me about it. He just went to work and he put all these signals into HGSI, just did it on his own. A pretty amazing feat in the short amount of time that he did it, and I'm more and more impressed with them the longer I use them. I hope everybody feels that way. The problem is, and you probably agree with me, we're overwhelmed with all this data. And where do we start? Because you can do so many things with HGSI. That's why, for the moment, and I'm not saying there won't be other things, I am concentrating on limiting the group to the high relative strength stocks and then prospecting with it every day. Seeing what's rotating in, see what the new ones are, and then look at what else is in the group. Because relative strength for many, many years now, as you all know, has been a major component of high growth stock investing. It just doesn't mean earnings, it means going where the strength is, and this is what this smart group does for us. Now, I could go through a whole bunch more stocks, but I think you're getting the idea, and I'm going to be out of time in about 10 minutes. What I want to do is I want to go into the group. Let's see, am I in the correct? No, I'm not in the correct group. I'm in okay, here's today's group. And what I did is I just copied some views and added a filter, and I placed these under, they're both in end of day and intraday, and under the quick start, and these fall into the classification of impulse reaction scans, because I think that that is the best fit for it, because I'm talking about expansion and contraction, looking for relatively safe entries. So here they are. If you go into the IR and you go under expansion and contraction, maybe these are not named appropriately, but because theoretically they're both expanding up and down. But I just used expansion for up and contraction for down. All right, let's look at the expansion up today. This is based upon 1 day. It's not a 3-day window, it's a 1-day window. So here's a stock that I'm not familiar with, but it meets the criteria because it's an RS 97. The group is 97. You would have had to chase a gap here on this one. It's a cheap stock, but you can see that yesterday when this was generated, it's based upon yesterday's data, that this went positive. See how it turned positive on the 0 just barely, but it happened yesterday on this, and you can see the 3 going up through the 6, and then it gapped up today. It's forming a doji, and it is also the second day of a pocket pivot, 2 pocket pivots in a row. And notice this down here. This one never did turn negative down here. And let's go back to this area here. VPOC turned positive. Look at the effort to rise, 3 of them in a row, 2 pocket pivots, a day off, 2 more pocket pivots. Expansion, clearly expanding here on the 6 versus the 3 and the 6 versus the 18. So this is one of those runs on that crossover day. Had you bought it the next day, cheap stock. Let's see what the percentage is. From here, I'll cheat and go to the high. 41.3% in 8 days. Not quite as good as Tilray, but not too shabby. I mean, we would take these trades anytime. And then what happened? You can see resistance coming in here with these upper wicks, and there's several VPA flags. Sign of weakness, pseudo upthrust, and then it came back down. But like I said, this one never turned negative. Let's look at the volume on this pullback here. You can see volume was much lighter than it was over here. So there wasn't a tremendous amount of selling pressure. And then it leveled off. Look at the group. The group was going down too, and then suddenly the group reversed to the upside, and who knows if it's going to go again. But it passed the view. Now let's look at Fate. Here's another one that is generating the signal, and this didn't happen until yesterday if you look down here, but there were, if you're looking for VPA flags, they were there. So, and that screen that I have in here that picks up the effort to rise, if you run that screen against the relative strength group, if fate was in there on that day, and I'd have to go back and look to see if it was, you would have picked this up. But if not, you would have picked it up right here. How many days does it go back? It's just a moving average, Paul. It goes indefinitely. Oh, you're talking about the screen. It's a 1 day. It's a 1 day. I decided to limit it to 1 day. Sorry about that. Originally, I was going to give it a 3-day window, but I thought that was a little late. I think we need it on the day, don't you? I mean, you can experience, but I could open the window up. And I could increase the volume too. But see, originally, okay, here's what's in it. The 18 has to be above the 52 also, I mean. But I had originally had this as a 2, and I thought that window was too wide. But you can come in here, play with this filter, and expand the window if you want to. Just put the number 2 in here and give yourself a 3-day window. And then you can see how that works out for you. But I just thought I'm looking for those that are crossing over today. Now here's another one. It actually crossed yesterday. You can't even see it. It's so small. There it is. Right here. And this would be an example of a 2-day window, because after you do the update today, if you had a 3-day window, I mean, you would see it again. So, maybe I'll change that in the future. Just do some experimentation yourself and see what you think. But I'm going to leave it on 1 day for now. Now, here's a couple that are down today that expanded yesterday, but, it's kind of hanging in here. Super value is a buyout. So, forget about that. Now, let's look at the other side of this. I'm using the same group. These are stocks that were down yesterday, where the 3 went down through the 6. And several of them are up today on a very strong market day, which is no surprise. And just this gives you the opportunity to find stocks that are in that congestion range or consolidation range. Spot shotter. See, you can see it went down, turned negative yesterday. But today, already it's going, at the end of the day, which is right now, it is turning positive. So during the day, you can take the same group of RS95 stocks and use this view, the contraction view, and I may have to change that terminology, but I think this will work as it is. And just look for the ones that are showing strength, that showed weakness yesterday and are showing strength today. Now, I would like to see stocks that are maybe exhibiting a VPA flag or showing some more volume. There's no conviction on this stock. You can see that. There's no pocket pivot. There's no volume, but it was up today. Let's go back to spot shotter. There's a little more conviction here, but volume is below the 90-day moving average. No pocket pivot. The VPOC has remained positive. This window has remained positive, the 6 versus the 18. Got an effort to rise today, even though there's no pocket pivot. So that's one I'd look at tomorrow. If it takes out the highs, might be a buy here. Let's look at another chart quickly. I'm just curious. I'm going to go down to my number 9 chart, and you can see that this is the unconfirmed pivot chart that I use, where it establishes a new low And it actually would have been a buy on this today when it took out yesterday's high. So you got all kinds of goodies to play with here. I don't want to overwhelm anybody, but I want you to have the options of looking at all these. Now let's look at Twilio. Here's a nice setup. Once again, not a lot of conviction, but it did get a test for supply. You all know what a test for supply is now, I hope. It's when a stock comes down and then closes near its high on light volume. It means that supply has dried up and it's reversed to close near the high. If there were a lot of supply, you would not see a flag that looks like this or a candle that looks like this. Wouldn't close near the high. You can see the VPOC turned positive. This area never did turn negative. And what do we have here? Let's see if I can. Yeah, it's still slightly red. But you look at all the factors, you make a determination and say, ask yourself, is it going to break out of this congestion area? Is it going to get up here? Is it going to succumb to weakness, at resistance? Who knows? But it didn't finish near the lows, and it's another potential stock. So ShotSpotter, Twilio, or however you pronounce it. Maybe all of these. Put them in a watch list. See what happens. This one has stayed positive here. It's in a congestion area though. All right. I've gone an hour. You have any questions? Doesn't make any sense to you what I'm doing here? If you say no, that's fine. Okay, good. I just think we need some visual guidelines to help us. I'm not the type of person that likes a whole bunch of indicators. But I think these are very useful. And, you combine the VPA and you combine the expansion contraction down here. You look over here to see the relative position of the stock price to the moving average and so on. Get some pocket pivots. Yeah, I'm doing fine, Steve. Physically, I'm doing fine. I'm just tied to the oncology lab every week. I feel great though, so that's what matters. That's what thousands of dollars worth of drugs each month will do for you. Fortunately, I have great insurance, so I don't have to worry about it. But anyway, I appreciate you attending, and thank you. I will try to do another webinar yet this month. I don't know what I will do. Thanks, Pierce. Yeah, you're welcome, Stephen. I don't know what I'll do, and if any of you have any ideas that you want to expand upon, just send me an email and we will talk. Thank you, Duke, and Mike and everybody else. Thanks, John. And I'll do it. But I never run out of things to talk about with HGSI. Sometimes they may not go an hour. So we'll do another one yet this month. Thanks a lot. I'm going to sign it off, and I'll get this recording out yet today. Thank you. Thanks, Steve.